Hello, Black America.
What you're about to see in the United States is an economic collapse like we've never witnessed before. You're going to lose every bit of equity you have. And I'm going to tell you why that's going to happen. I'm going to tell you the things that have led up to that. But I would be too pessimistic to not give you the alternative, the preparation. All right, Deshaun, when we pull our money out, where's that money gonna go? Because you can sit on it, but if I tell you pull it out and then you pull it out and you also have the vision to watch and to pray for where it needs to go, you're gonna be just fine. But I'm telling you right now that the United States has allowed things to happen over the last 14 years in this country. At the time of this recording, it's been 14 years of things that they've allowed to happen where they built an economic house of cards. We're going to talk about the national debt. We're going to talk about how they ran it up. We're going to talk about who got rich, wealthy, multiplied their net worth over the last 14 years in the next segment. And when you see this house of cards, and how those people are perfectly positioned to, when it collapses, not just be okay, but to buy more. In a healthy community, everything is owned by the people in the community. So where the money came from to build these houses, to build these cities, these roads, bridges, airports, it all came from the people in the community. So as the value of these companies increases, the wealth of the people increases, the wealth of the community increases. But that's not how they do things in this world so far. What they do is they allow the rich to be the ones to put the money up. We've all heard the term the rich get richer, right? But that's the fiber of how money is raised in this country. So if somebody wants to go and build an airport, they're going to pitch that to people who have money, usually a private equity firm. So a private equity firm pools rich people's money. You can't even get into some of these firms if you don't have 10 million to contribute. Some of them is 50 million. Some of the hedge funds is 100 million. You can't even get in. People like us cannot get in. But what happens is when they go to those people and say, hey, we're building something that'll be worth $3 billion. We need to raise 50 million. They get it from them. And they give the majority of the ownership to them. So now when this is now worth $1 billion, those rich people who invested, they multiplied their net worth. Now, that's just the financial structure of this country. That's the financial structure of private equity. Investment banks moving big money around to big projects, buying out companies that, companies like Famous Amos. We all look and say, oh, how do all of these black hair care companies keep getting bought out? This is how it happens. It's investment banks, it's private equity firms. Their job is to move a lot of money for rich people into these things and consolidate them. It's not the people. It's not the people. But the vulnerability is they've set themselves up for disruption. Because we will build this. And now let me show you how the United States sold us out and why. What I want you to focus on as you listen to me right now is diversifying. If you have all your eggs in one basket, we've been taught that since we were in elementary school. Don't put all your eggs in one basket. Right? This is not a new thing. So diversifying is, where's my money? And if, God forbid, the place where my money is collapses, do I lose it all? Do I lose some, 10%, 50%, 80%? And that's your exposure. The more, if you're not diversified, you have tons of exposure. You can lose everything in one shot. And let me tell you how this happened. Okay, I'm going to take my time with this. So this started in 2009 after the Great Recession. They began to sell us out. They gave Wall Street and the big banks bailouts. And we've all heard this. But I'm going to go deep on why that created a 14-year run of the rich getting richer on our backs. So the banks are not lending. I'm in the auto industry at the time. Dealerships shutting down left and right. I remember these days. I remember going in and GM had lost dealerships. We lost Pontiac. People praying that they were going to keep their jobs. I remember this very well. Now, here comes the government bailout. Government bailout, they give the money to the banks. The Fed gets involved and said, okay, we're going to cut rates to almost nothing. So now the Fed is the country's bank. Some people think the Fed is a government agency. It's not. The Fed is a private institution. It's the national bank. It's the bank that actually lends money to the country with interest. So we owe the Fed a bunch of money, and that's money from around the world. People have invested in the United States. We owe that money. Now, the debt was already high, but we're in trouble now. Banks are not lending. No one can buy houses. No one can buy cars. It's a nightmare. People are losing everything. The economy is stuck. Scary position. President Obama comes in at the time, works the deal out with the Fed. Fed says, all right, we're going to do something we're going to call quantitative easing. I want you to look up that term. Quantitative easing. We're going to put money into the market, make it cheap to stimulate the economy. So now banks have the ability to lend. They weren't lending for a little bit. They didn't even start lending immediately because they were like, hey, we got all this free money. What can we do with this? Free money. We used to give people, every now and then when I worked at General Motors, just to give you a term that you might be familiar with in terms of free money, 0% financing. When people went in to buy a car, if they had 0% financing, they would allow you to just finance the car, no interest. That means make your payments, no interest. That's what they did with the banks. It was like 0.25% interest. They were lending money to the banks at. So the banks say, okay, well, what are we going to do with this money? We got a lot of foreclosures around this country. You remember the foreclosure crisis, 2009? People losing houses. So, okay, why don't we buy some of them? Let's buy some of those houses. Okay. This is when we started seeing institutional investors buy houses. We had never saw that at scale before this time period. So now they are, buying houses. They're lending again. Okay, economy starts to get stimulated. 3-4 years in, economists start suggesting, hey, all right, I think we can chill because when money's cheap, inflation goes up. When you put a lot of money into the market, you're creating inflation because people are buying. So naturally, if people are buying, prices are going to go up. So this is when, and this is when they started saying, hey, all right, hey, okay, it's time to chill with the free money. But they like the economy too much. They like the economy too much. People are buying. So they said, all right, we'll keep it going. President Trump gets in 2016. We've had 6 years at that particular point of quantitative easing. Quantitative easing. This is what will be the destruction of the United States. When we look back in history, one of the things that will, if they don't get over this, if they don't fix this, this will, I'm going to keep saying those words to you. So 50 years from now, when you're talking to your grandchildren and they ask you, whatever happened to the United States that you grew up in, you can tell them quantitative easing. They're allowing Wall Street now to buy houses, but they want us to buy houses. Some of you went to look at houses over the last 14 years and you weren't competing with someone like me or Kawan or Curtis. You were competing with a Wall Street company who has unlimited money. You can't compete. And we thought and we looked and said, wait, well, what does this actually mean? Just Wall Street's buying houses? Oh, BlackRock's buying houses. What does that actually mean, though? They're putting free money to work. Now let's go deeper. America allowed this. This is why I have a problem with the economic structure in America. This is why if I was sitting down with a politician, I would say, this happened on your watch. You made us compete with Wall Street to buy houses knowing that they already own tens of thousands of houses. So what does that mean? When you buy real estate, there's a couple benefits. There's write-offs for taxes. There's write-offs for depreciation. But if you are very fortunate, you get something called appreciation, where the value of your house goes up. You know what makes the value of your house go up? Limited supply. Demand. Lots of demand, limited supply. So if I'm Wall Street and I'm sitting on 50,000 houses, what's the best thing I could do to make sure the value of those houses keeps going up? Keep buying more houses. So normally, and this is this house of cards. See, some of you are already seeing it. Normally, values of property the value of properties go up because the community's doing well. The actual, the economics in that community, well, people got jobs, people, pride of ownership. That's what's causing appreciation. But when there are people who, Curtis, and Kwan, we'll put this up on the screen. There was a point in time where 1 out of every 4 transactions for the last 14 years was an institutional investor. 1 out of every 4. I looked it up. 1 out of every 4. So nobody went to Wall Street and said, hey guys, y'all are buying too many houses. Y'all don't have the same finances that our middle class and low class have. Y'all are actually driving up prices of homes artificially to the point where they can't afford them. They let it happen. So they don't pull back the rates. Wall Street eventually says, well, we got free money too. What can we do with it? We had more stock buybacks in the last 10 years than we've ever had. And this is all stuff that we watched happen, but I'm bringing it to your attention to show this house of cards and why it's about to collapse. What was the stock buybacks about? Why did we see Berkshire Hathaway buying stocks back? Why did we see Apple buying stocks back? Normally, that meant your company was in trouble. In a normal market, if you had to buy your stock back, that means, that wasn't a good sign. That means that wasn't good. But when you have billions upon billions of dollars of free money that you have to put to work, the best thing you could do is let's buy stock. Let's buy our own stock back, because now there's less stock out there, and you who bought your little Tesla stock and you thought, man, you scraped together your little $180 for your fractional piece of Tesla stock, and you thought you were doing something with that. Meanwhile, they're artificially creating a bubble by buying stocks back, driving up the stock price because there's less stock out there. See, normally, when the company's doing well, the stock price goes up. Nothing happened in that time period with these companies. They didn't launch new innovation. I want you to pull it up. We'll pull up the wealth of Elon Musk over a 24-month period. It's amazing how it almost doubled. It may have doubled. This happened for everyone. Why did it happen though? Did Tesla launch some new technology? Did Tesla come out with some groundbreaking thing? Did they build some new infrastructure that made it say, wow, Tesla's a whole lot valuable now. That's why Elon Musk is a whole lot richer. No. In the minute that Wall Street came, and this guy named, I believe he may still be the chairman of the Fed. His last name is Powell. 2017, I believe, as soon as he got appointed chairman of the Fed, he said, this is good. This is going to be a problem. Now, meanwhile, the political people, they already know. The economists have been telling them for years now, you can't keep doing this because hyperinflation's coming. See, in a couple years of free money going into the market, just give me a couple more minutes, Curtis. We'll take it from another segment. A little money going into the market, that's one thing. It's going to drive up inflation eventually if those rates stay low. But years and years, now we got hyperinflation coming. Now we got what we're witnessing today. Take the pandemic out of it. So Powell gets in. His name is Jerome Powell. Thank you, Curtis. Chairman of the Fed. He gets in. He says, hey, guys, all right, we've had, I think at that time it was 7 years of quantitative easing. All right, it's time for us to really start to raise the rates little by little because we need to control future inflation. Donald Trump at the time says this was his guy. He appointed him. The next day after he raised the rate a little bit, Donald Trump came on and said, hey, Wall Street's reacting. See, when you've had 7 years of free money and then you see it going away, people start dumping. Wall Street reacted. Dow Jones goes down. What? Why? Why? Free money run is starting to end, y'all. All right, things got to change. They should have let that keep happening. But what they did was they took Donald Trump's criticism and they said, all right, you got us. We're gonna roll the rates back. We'll keep the rates low. At that particular point, Wall Street and the Fed got in bed together. So now the Fed, who is the country's bank, remember what I told y'all 10 minutes ago. This is the country's bank, independently owned. Now they're in bed with Wall Street to the point where Wall Street can say, hey, keep the rates low because we make more money. And they did that for literally 3 more years. Got up and said, all right, it's time. Let's start raising the rates. Then a pandemic hits. See, all of this, what I'm telling you and what I'm laying out for you, you can watch a documentary called The Age of Easy Money. It'll go much more into this. You'll hear from the economists. You'll hear from the people who've warned the politicians what they should have been doing during the age of free money, the jobs they should have been creating. There's tons of reasons I have problems with these politicians. When rates were low, they were supposed to be building bridges, airports, rebuilding infrastructure, hiring millions of people while we had the cheap money. That would have grown the GDP of the country. That would have created millions of jobs cheap. We could have rebuilt this country in a 7 to 10 year period with that cheap money. But they were so busy making deals with Wall Street and fighting with each other, nothing got done. Now the free money's gone. And who's left to pay it back? Us.
Hello, Black America.
Who's feeling the inflation? Us. The same people that warned them that they didn't listen to for 14 years. We can't do this, y'all. This is going to be a problem, and the people are going to have to pay it back. You got people who multiplied their net worth, billions, bought yachts. Why were people getting super wealthy, tripling their net worth over the last 14 years, and now the bag gets handed to us? That's the reason. That's the reason. And that's why we must diversify. In the next segment, I'm going to tell you how we diversify, what social capitalism looks like, and why you need to pull your money out of those systems because that house of cards that they built over the last 14 years is about to collapse. And if your money's in it, you're going to lose it. Hello, Black America.